Well, let's get into more voices. Firstly, Abhay Agarwal, Managing Director, Piper Serica, with us, as is Deven Choksi, Managing Director of DR Choksi Investment Managers. Gentlemen, both of you, thanks so much for joining in. And to you and yours, from all of us, a very happy Diwali and Sal Mubarak. Abhay, you are probably not so constructive, but today's the day when you still shed all of those inhibitions and talk about what looks good. So let's try and talk about what looks good amidst a scenario which may not be the best.
Yeah, Neeraj, first of all, very happy Diwali to you and the viewers, and wishing everybody a great Samvat. Yeah, you're right. I think based on the earnings and based on the cyclical slowdown that we are in, I think the earnings outlook will keep getting adjusted downwards. So in that scenario, it is difficult right now to see what will drive the Nifty index level over the next 6 to 12 months. So what will happen then is that to make returns, the equity investors will need to find those themes and those stocks, that will outperform in terms of earning growth the broader markets. And I think that's where the good news is, while the overall market, the Nifty itself, the large caps may go sideways, devoid of any earnings good news or earnings momentum. There are in the broader market, there are opportunities that exist. There are a lot of new companies that have got listed over the last couple of years, Neeraj, that have now started to find feet and in very exciting sectors that we believe are, potentially multi-baggers. And there is domestic CDMO, the space that we talked about, companies like Windlass and Acoms. And these are not my buy recommendation, I'm just talking about sectors. Then there are companies that are catering to semiconductors, complex electronics, companies that are focused on exports. And I think there will be a big government thrust to exports. There will be a big government thrust to, replacing imports from other countries, especially neighboring countries. So I think in that positive macro environment, these are mid-cap, small-cap companies that will become multi-baggers. We are very confident of that. I think the investors would just have to do the hard work of finding them and staying with them through the market volatility.
So while I know we I guess we resonate with the fact that the global setup looks tough, and the fact remains that we have borrowed returns from the future. So any sort of correction, some may believe, is actually healthy and well timed. When we look at it structurally, no one's arguing that the India story is still very intact. But post-earnings season, which largely most people agree, barring a few sectors, might have been a disappointment. But anything from the 57 sector universe that we've seen, there must be something you like, right? Something where you see value, where you see the risk reward is in favor of the investor.
Yeah, Samina, of course, we are very, very bullish on the long-term, medium to long-term prospects of India as an economy, as a country, and as a place for equity investors to be. It's just that in the short term, we are worried about the cyclical downturn, which is par for the course. When economies grow like this, they take a pause, they form a base, and then they grow from there. So that's where we are. I'm not so worried about the medium and long term. And there are opportunities, as you said. We are very constructive on the entire insurance space, health, life, non-life. I think, that is a space that has seen sideways movement of price. As a result, earnings have grown, valuations have fallen, and are now quite attractive for the growth that is there in front of you. So insurance as a space looks very attractive to us. Pharma as a space looks very attractive to us. I think some of the Indian companies have phenomenal product pipelines, which analysts are not looking at carefully. And when these, like what happened with Cipla yesterday, when these products come into the market, they will be game changers for the pharma industry. We are very bullish, or starting to get bullish on the entire metal space, because if China reflates, it will lead to re-rating of metals which are trading at abysmal levels still because of China dumping. So I think there are sectors like these where there is great opportunity for astute investors to make their picks.
So we have the session has shut, and I would say not half bad. Nifty didn't quite make it to 24,300.
I want to see the FI sell numbers today.
I think that's why we managed to close
43 sessions, right? What did he say last day?
23.
23, yeah, there are only that many days in
नहीं,
October.
लगता है ऐसा है कि 43
So
sessions.
it felt, but 23, but feels like 43.
43. So I want to see it today.
So FIs have
But do you think that we
taken
know
a break
FI
from
selling? It is Friday and Europe might be still open for all you know.
Oh God! I think,
And Wall Street may be doing
I think the point being maybe that's what's responsible for the uptick that we're seeing.
Missing
So,
FIs.
so yeah, missing FIs who are like taking a break, maybe Diwali break from dumping into equity. But Monday onwards, you might see that pressure coming in. All right, let's see how we've closed, and let's pull up the Nifty heat map for you. Auto is the story of this session, and let's be honest, this session is more about symbolism rather than any big move. But M&M, they're doing really well. ONGC as well, some of that auto pack doing well. On the broader markets, Poly Medicure has been the star of the session, as is Piramal Pharma, RBL Bank, Brigade, Vodafone seeing that big pump up, and Motilal Oswal jumping about 4% at the closing session. Abhay Agarwal, you know, just would you look at auto more closely in light of the numbers that have come in, the sales numbers? Do you think that could be one theme, one story for the start of the next week? You talked about metals, which is also very important because we'll have more information coming in on what China is doing to boost their economy.
Yeah, I think on autos, we have been fairly negative for last 2 quarters. And Tamanna, that is because the channel inventories continue to pile up. So while auto companies have shown good sales, they have not translated into sales at retail level. The last check that we did last week, we found inventory levels to be above 80 days, which is extraordinarily high. I have never seen in 30 years inventory levels of 80 days plus, even in the COVID times. So there is a structural problem. Buying has slowed down tremendously. So I will not be surprised November, December, January, we see plant shutdowns for 3, 4, 5 days, which used to happen earlier. Mahindra, Maruti used to take plant shutdowns to cut inventory. I think we are headed there. So I will wait for at least a quarter more of retail sales picking up, inventory getting cleaned before, we start looking at buying anything in the auto space.
Okay. Before buying in the auto space. Okay, Abhay, we'll take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time, and have a great festive season.